QuickBooks Pro Desktop 2021. Track and pay invoices from Customer Center. Let's get into it with Intuit's QuickBooks Pro Desktop 2021. Here we are in our Get Great Guitars homepage. We currently have the open windows open. You can open the open windows by going to the view dropdown and selecting the open windows list. We're going to be entering the receive payments and then going on to entering the deposit. So we're going through the customer receivable cycle at this point, or the sales cycle. So we've entered invoices in the past, the invoices increasing the accounts receivable. Now we are expecting payment on them. I think the easiest way to imagine that would be that we issued the invoice after doing work, and then we expect to be receiving the payment, let's say, in the mail. That's the easiest thing to kind of picture. Then we open up the mail and we're saying, okay, now we have a payment that we're receiving. That's not the only format of payment we might receive. We might have electronic payments and whatnot, but I think that's the easiest to kind of visualize. Now we're getting the payment. That means we're going to be decreasing the accounts receivable and recording it into either undeposited funds or into the checking account, depending on how we have things set up. We're going to deposit ours into undeposited funds and then record the deposits so that we can group those deposits and have control over the grouping of the deposits so that we can group them in the same format in our system as we expect them to be seen on the bank statement, making it easier for reconciliation of our books to the bank statement, of the bank statement and our books. So now that we have the invoices in place, there's a couple different ways we might want to track the invoices that are owed to us. So obviously we have the reports that we can take a look at. I'm going to go to the reports up top, company and financial, and let's go down to the balance sheet report and change the dates in the custom report up top, and changing those dates from 01/01/21 to 12/31/21, January to December 2021. There is our accounts receivable total. That's how much people owe us. Then we want to see who owes us that money and how can we collect on it. To do that, we can go to the reports drop down. We can go to the customers and receivables, and I'm going to look at the customer balance. Well, we could look at the summary. I like looking at the detail, though. That'll give us more information on it, although this report will get quite long if you were to have a whole lot of customer receivables. But now we can see, who owes us the money, right? We can say, all right, here's Anderson owes us money, and we have the open invoices that we can take a look at here, and we can get an idea of who owes us basically money, and we can double click and check the invoices. For example, this invoice, I can double click on it and say, well, there's the invoice that somebody owes us, and we can then send another payment out or send another reminder, send out the invoice again if we so choose to in an attempt to collect on it. We can also say once here, we can then say, okay, now here's the invoice, and I can then go to the receive payment from the invoice and say, I want to link this to the receive payment. And that'll help us out and jump over to the customer payment form. So that's one way you might go about kind of figuring out who owes us the money. And that's one way when you receive the payment that you might go into the receive payment form and link things out. Obviously, when you go into the receive payment form, if you got the payment, then you could simply look up the vendor, or the customer, I should say, the customer, and then you'll have the open items down here, and you could check them off that way as we've seen in the past. Closing this back out. I'm not going to record it at this point. I'm going to close this one out. And so that's what we have here. That's one way that you can kind of sort this stuff out. You can also use the filters of this report to do more sorting for it, and you can use a summary report and whatnot, as we saw when we went over all the reports. Another place you might go, though, is you might go to the Customer Center, which you can go from the home page here, or you might go to the Customer dropdown and go to the Customer Center here. And this is where we usually are on this tab. We have our list of customers. You could go to the Transaction tab, and then we might choose one of these items, right? We might choose, okay, I want to search for the invoices. Let's say we're going to search for the invoices here, and then on the right hand side, just make sure that you're in 2021. So for me, I'm going to go to the next fiscal year because it's currently 2020 and I want to see 2021 data. And then once again, you can kind of sort this data here. We have all the invoices so far. If we had a business that's shipping out invoices or sending invoices all the time, this could be quite extensive. But then you can use the sorting field up top. And you could say, okay, I just want to look at the open invoices, for example. That will sort our field nicely. So then we can just go nicely here. This might be an easier way than to sort the reports. Some people might like going in here and using the sorting field. a little bit more easily. Or you can look at the overdue invoices. We don't have any at this time. So if I go back to the open invoices, let's say open invoices, and then I was to basically double click on any of those items, then once again, if you got a payment on it, you could go to the receive payment from here, which will link you directly to the customer payment form. So some people might not actually open the customer payment form, right? They might be linking from the invoice to the customer payment, and that might be a nice way to do it. So we close that out. We close this out. So, and then if you're going to go through the standard kind of way, then you'd go to the home page, what we've been doing, and follow the flow chart, right? You say, okay, here's the credit invoice. We received a payment on it. And once you receive the payment, you're going to know who it is. So once again, we go back to that customer payment form. If we got a payment, for example, from Music Stuff Store, then we're going to say tab, and we're going to see that that payment down below, or the invoice related to it, and then we can select that item. And now we're back to the normal process. I'm going to assume it's a check here. I'm going to check this off, and that'll populate the field for us. We're going to assume that we're going to get a payment for the entire thing. I'm going to increase the date to the 23rd. So we're going to say the date is the 23rd. If we had a check number, this is the check that we would be receiving. We can put in the check number. Again, these payment types up top are basically for informational type of purchases. It doesn't change the form in any major way. But when you see these different types of payments, or as you get different types of payments, you may treat them differently, right? If we had cash, for sure, we probably want to be then putting it into this undeposited funds. If we're receiving checks and we expect our checks to be put into the bank in the same format as we're receiving them, for example, if we get electronic type of checks or an electronic payment and we expect them to be shown on the bank statement one at a time, check by check, then we might just remove this one, right? You might say, I'm not going to go to the undeposited funds, but deposit that directly into the checking account, because I don't need that added step of going to the bank account, because there's no added grouping I need, because the check is going to show up on the bank account in the same format as it is here. It's only when you need to group them differently that you need to basically use this undeposited funds. Now note, this field once again will not be there unless you have it turned on. You go to the editing, and you want to go to preferences down below, and you want to make sure that in the payments, which is down here, the payments, you want to uncheck that if you want that option to be available. The reason that the default has it on will not show that is that if you're switching back and forth between going through undeposited and not doing so, you might confuse people. So you might just, if you use the undeposited funds, closing this back out, you might simply you use it all the time, right? So even if I was going to deposit this single check into the bank account, I might just keep doing my normal process and then record the customer payment and then record it into the undeposited funds. So that's going to be that. I'm going to say save, and what's this going to do when we record it? It's going to be increasing the undeposited funds. The other side is going to be decreasing the accounts receivable, and it'll decrease the accounts receivable specifically for this customer for the Music Stuff stores. Let's save and close it. Let's check it out. We're going to go to, let's close this out, close out the customer center and the customer balance detail. That's good. And then the balance sheet. So on the balance sheet now, we got the accounts receivable. Double clicking the accounts receivable, we can see that it has now gone down. So if I double click on that, it'll go to our form here, closing that back out, closing this back out. And the other side then is going to go into undeposited funds. There it is right there. Double clicking on it, we see the undeposited funds increasing there. We also know that the customer balance detail, if I go to the customer balance detail, will then have Music Stuff Store, the payment. There's the payment there. And then if I go to the home page and I open up the customers again, let's open that customer center. I can do it up top or in the home page. And then the open invoices, if I take a look at the open invoices, that invoice has now been paid now. So if I look at all invoices, we see that invoice there. And then if I go to open invoices, of course, it has now gone away. We also note in the home page, if I go back to the home page, now we have 3 items in the record deposit that indicate that these items are in undeposited funds. So let's do this again. If I go back to the customer center then, within the customer center, now we're going to do this for Anderson Guitars. So Anderson Guitars here, we see this open invoice over here in the customer center transactions, open invoice. We can go there from here and record this. Let's go ahead and do that. I'm going to double click on this item and say, okay, we're going to receive a payment on this invoice. So then we could link it directly here to the receive payment if we so choose and say receive payment, and then it'll generate basically our customer payment for us. So now we have it just like we would if we search the vendor here. It's already checked off. That's going to be the invoice that's going to be linked to it. I'll keep the check as the payment type, just adding a number here. We'll add the number there. What's this going to do when we record it? It's going to be increasing the undeposited funds because we have undeposited funds selected. The other side decreasing the accounts receivable and decreasing the accounts receivable specifically for the customer of Anderson Guitars. Let's save and close that. So there we have that. I'm going to close this out. And then, of course, in our open window or open invoices, that invoice has now disappeared. If I go to all invoices, we see it there in the all invoices. These Anderson Guitars, one of those was it. And then open invoices, it's now gone. If I go to the balance sheet, we see that the accounts receivable, double click in the accounts receivable. There's the amount there in the accounts receivable, closing it back out. Undeposited funds, that's the other side, double clicking on it. We see it down here in undeposited funds, no effect on the income statement. We also see it in the customer balance detail report in the open windows. It should be in the customer balance detail report, and we see that the total, I think it was Anderson, I think it was that one that we just did, but the total is going to be at the 5223, and that 5223 should match what we have on the balance sheet now, the 5223. So now let's go ahead and deposit them. So I'm going to go back to the home page. So we've had the received payment, and once again, we put all those received payments into undeposited funds. And the reason we did that is so we have control over the grouping that they will be grouped on as we put them into the checking account, so that we can match our grouping to the bank. And so remember, it really depends on what your system is, on how they're going to be in the bank, right? If they're in there check by check, and every check you receive is going to be a separate item in your bank as you deposit it, then you really you may not need this added step. But if it's grouped in some other way, and oftentimes if you run through credit card payments or something, you're going to have to figure this out with the credit card deposits that are coming from the credit card company and how they're grouping the deposits. You're going to have to work with that, and you might use undeposited funds to help you with that. If you got cash payments, you're going to do that. If you're grouping the checks together in some way, shape, or form, that they're going to be grouped in some way other than one check at a time, then you're going to want to make sure that you use this undeposited funds. So then you have control over here and say, okay, now I'm going to be checking this off as they're going to appear on, in the bank statement. And the easiest way to think about that is like with the cash transactions, that you would be now going to the bank and putting all these cash transactions at one point into the bank. And therefore, it's going to show up on the bank side as one lump sum, even though on your side, it was multiple sales that took place. So you don't want to record multiple sales in the checking account because you want to show it as one lump sum so you can tie it out in the bank reconciliation. That's the easiest way to think about it. But again, you might have the same kind of problem in different scenarios, meaning like, again, the credit card companies are going to group your deposits in some way and put it into the bank in some way. And you're going to have to figure out how can you line up their deposits of multiple receipts from multiple different customers to your side of things and grouping your sales side of things as well. And again, you could be checks or as well. So I'm gonna group all these together. I'm gonna say that now we're gonna put them all together as if when we go to the bank, we're grouping them all together now as if they're gonna show up on the bank statement as one big lump sum. And that's how I want to report it on our side. So that means in the bank or checking account on our books, it's going to be on the books at 8861.70, even though there were 4 different sales that took place. And I'm doing that because when I expect to see the bank statement, I expect to see one lump sum deposit of that amount on the bank statement. So I'm going to say okay. And so there we have it. I'll keep the date at the 23rd, so that's fine. Let's keep that. And then I'm going to say what's this going to do? It's going to increase the checking account, decrease undeposited funds, as we can see these all coming out of undeposited funds. Let's save and close that. And then let's go to the balance sheet and check it out. So going to the balance sheet, double clicking on the checking account, you'll see down here that $8,000 886170 is all one lump sum, even though I double click on it and it's consisting of 4 different transactions that are grouped together within it. Closing this back out, closing this back out. The other side's an undeposited funds, which is now gone because it has a 0 balance. I like taking a look at the trial balance to check it out. So let's go to the reports drop down and the accounting and taxes trial balance, changing the date up top from 01/01/21 to 12/31/21. Then we have the undeposited funds, which has a 0 balance, but we can double click on it to zoom into it. And we see the bottom here, we got these transactions have now been broken out into the individual transactions. We see the detail in the undeposited funds, but if we select any one of these 3 down here, or 4, then we'll see the detail and we'll see the lump sum deposit into the checking account. Closing this back out. Let's just review the numbers. Here's where we stand at this point in time. This is the balance sheet. So if you're following along with us, you can check out your numbers here. There was no effect to the income statement because all we did was take money out of one asset and put it into another, meaning we got cash and we reduced the receivables, and then we took it out of undeposited funds, put it into the bank account. When was the income statement affected? When we made the sale, when we made the invoice at the start of this process in a prior presentation. So then the other side, then the other thing you can check your numbers with is the trial balance. So if you're following along and want to check your numbers with the trial balance, this is where we stand with it.